but let's welcome in Sandip Agarwal also, who's joining us. And this is, of course, Sandip is a big bull on IT, has been for a while. And Accenture earnings and outlook is what we want to discuss. So the numbers, relative to estimates and their own guidance, Sandip, Accenture was solid. Currency was a headwind for them. But otherwise, across the board, really no problems. What does it mean, though, for Indian IT services companies and those who are trying to certain trends, looking at Accenture and extrapolating them for Indian IT services? Go on.
Yeah, I think, good morning and thanks for having me on the show. So I think, there is a little confusion in the mind of investors that while commentary is very strong, the booking numbers are looking a little softer. That is the perception. That is the way people are, reading the numbers. I think, maybe numbers could have been better by $30 million more. But is that a big change on a base of $16 billion in a quarter? I think the more important thing is the commentary. If you see the commentary, and that is what we have been continuously highlighting, that tech is a revenue enabler. It is no more a discretionary spend or a cost-saving equipment alone. So, I think tech will be the last spend to be cut, even if there are some, big problems in the economies, which the economists are forecasting. And obviously, I'm not an economist, so I can't, counter that. But I will only give one very important data that, if you see from 1989 to 2015, always when US economy has gone down, our spends have gone down, IT spends have gone down. When it has gone up, our spends have benefited. Because also, we have 50-60% of exposure to the financial industry in the US. So I think now that has changed in the last 4-5 years. The dependence on US financial industry has gone down. We are now working more closely with the new tech companies, the FANGs companies, number one. Number two is that, the Indian IT is no more being used for cutting cost and experiences. It is also used for generating revenue. So I think as an analyst, if I also go with the historical data, which, is in favor of economists, then I think it is very easy to predict that, okay, there will be gloom and doom and there will be, demand downturn going forward. But I think, we should see what is happening on the ground. We are in continuous touch with so many global technologists, and what we are hearing from them on a day-to-day basis, that demand is very strong, and they believe, like what happened post-COVID, that, tech was not cut while global economies declined by a big percentage. This time also, you will see big demand growth in IT, and it will not necessarily go in tandem with the US economic growth rate. That is what we are getting from the ground. So we are very bullish. We continue to be bullish. And I think the best part is now the attrition is also coming off very quickly. So we will have both the things. We will have good growth and good margins. That is the way I look at the sector.
Okay, Sandip, you're looking at the sector positively. No two ways about that. So what do you buy then? Will you stick to the large cap names, or do you believe the mid cap IT stocks that ran ahead of themselves, maybe fundamentally, they are the ones that you'll get into? Go ahead.
So I will prefer more value picks right now. So in the large cap, I will prefer more of HCL and TechM, and then followed by obviously Infy, TCS, Wipro. You can buy any of them, but I will prefer more HCL and TechM because there is a lot of value in them.
Okay.
In the mid cap, again, I will be a value buyer like Mindtree, Coforge, LTI. And in the small cap, I think Gensar, Birlasoft, and Firstsource are looking very good. I will still be a little cautious on the expensive names, particularly in the ER&D space, because there is little more disruption which can happen in that space, because still the supply chain issues are not resolved. So that is the way I look at the sector.
Okay, Morgan Stanley put out a very interesting note, Sandip, where they said that there is a bit of moderation as far as the ACN booking growth is concerned, and that could be seen as a negative read-through for Indian IT stocks, although there's no negative management commentary yet. Would you be concerned that as we head into a recession in the US, which is the base case, client spending could reduce, maybe not just yet, but there could be some drawdowns in client spending eventually hitting these companies?
See, as I started with that commentary that, the bookings are looking a little softer, maybe 200 million more on each of those. Consulting and outsourcing could have given a bigger thumbs up. But I will go more with the qualitative commentary. The management specifically made a commentary that Q4 is even stronger. So I will take that commentary on the face value rather than just seeing a $200 million miss on the booking as a concrete data point. Secondly, I would say that, outsourcing is always the best and economical way of executing at a large scale for everyone. So I think that spend will always be the last one to get cut, even if, cuts happen. So I don't think, Indian IT is in a place where it will see a cut. I think we will continue to do extremely well. That is what my sense is.
We had the management, Sandip, of E-Class with us yesterday. And so we asked the same questions in terms of hit on order size or margins, pricing, etc. He said, well, margins and size of orders, etc. should be okay, but what happens usually is that orders get postponed, deferred. Depending on the underlying situation, could be 12 months, 18 months, tough to say. Is that something we could see across the board?
Yes, see, this postponement is something which we are not seeing at all today. Means I have spoken to a lot of clients globally. I have spoken to a lot of chief technology officers, and we have listened to what managements are also saying. But in the past, as I said, before 2015, we have seen this, that, whenever there is a recession or there is a downturn in US economy, these orders get postponed. We are not seeing at all today any of such thing. And at least for next 2 quarters, it doesn't seem to be, happening. But obviously beyond 6 months, I don't think any of the IT company management has any clarity, nor the clients have clarity. And if I claim that I have clarity, then it will be grossly wrong on my part. But I would only say as an analyst that, tech spends will be the last one to get cut. And before that, a lot of disruption will happen in most of the other sectors. And you will see the other indexes fall much more sharply in the US before, what happens to tech. That is the way I'll put. So it will still be the best performing sector, if at all those kind of scenario emerges.
Sandip, you have buys on most of the stocks. Any of the IT stocks you have a sell on? I was just curious because you're sounding, you're brushing aside most of the negatives. You are sounding very, very confident on growth, on margins, on some of them are giving valuation comfort, like you said, HCL Tech and Tech Mahindra. Any sell in the IT space?
My call was on a sector. We were very bullish on the sector 2 years back. So we don't have any sell rating because of that. We are very positive on the whole sector. We believe demand will be good and everyone will benefit. See, when sector does well, everyone benefits. We could have our preferences, which I called out.
So these stocks, Tata Elxsi, Mindtree, KPIT Tech, they used to be the darlings of the market. Now, most of them have shared about 30-40% from the top. You think it's a good time to buy again?
No, as I said that, I will be still cautious on the ER&D names. So Tata Elxsi has a lot of ER&D, KPIT has a lot of ER&D exposure. So LTTS have ER&D exposure. So I will be little cautious on those names because supply chain disruption has not got over yet. So I will be more with plain IT vanilla services pieces or the cloud businesses. I will be more bullish on those names right now.
Okay, we leave it at that. Sandip, thanks a lot for joining us and giving us a quick take on what's happening in the IT sector. Accenture's management commentary was quite good. Demand is good. Pricing is also better. So I think there would be a positive read-through for IT stocks today. But Gurmeet Chadda is still with us.